Okay, everyone, welcome back. We're going to get into the charts here in a second. I'm going to go through the general indices, kind of review some of the trade ideas or some of the stocks that I'm currently trading. So we'll look at those and then we'll wrap up. I haven't been putting out videos every day this week and pretty light the last couple weeks, really just because it's light volume trading, holiday trading, and so I don't take much. Confirmation, during this time. So if you have breakouts or breakdowns, I definitely, I take those with a grain of salt, basically. So I want to point out a couple things, and there's a stock that has, I see a trade, I see a breakout. I just personally want to wait till next week to see how what the market does with that. When you get some more volume coming back in the new year, but I'll point it out for everyone. All right, so let's get started. And just real quick, if anybody's interested, I'm doing some research recently into creating a quality or qualified opportunity zone fund. It's part of the tax law that just came out in 2018, and I've got some capital gains that I'm trying to defer and ultimately not pay. Pretty sizable amount. So I'm basically looking at that as an option. If anybody knows anything about that or has some experience with those, maybe leave that in the comment below. I'd be interested in kind of hearing about that. I'm looking at, potentially just creating my own fund from an LLC that I have and building some apartment complexes is what we're looking at. So I don't know if anybody's interested in that. I've been spending some time doing some research, and if you have any information on that, that'd be cool. All right, let's get into the charts here. NASDAQ futures. So, all right, we're up at all-time highs basically. We're just chopping around. I don't see anything. I don't see any sell signal or anything telling me that the market's going to come down as of right now. So I'm just kind of waiting. And in reality, if you go to the daily here on the futures, I don't really have a pattern to trade against. And so I'm kind of waiting for some more data to show up for some sort of a pattern to develop. I mean, as of right now, yeah, I might be able to make out some, this trend line here broke, but we can go ahead and delete it because we don't need it anymore. Maybe we got something like that. We'll leave that one up, and let's go ahead and just kind of clean some of this up here. And we'll just trade against this pattern for now. You can see we have a trend line there, and we've hit that as support. We continue to move up that trend line. So I'm gonna look at that for the next sell signal. Until then, I just don't see any kind of sell signal. SPY futures here. This one still has this bearish rising wedge pattern. We chopped to the upside of it, but have since failed. And now you can see if I extend this out, we're basically just right there at resistance. So I suspect nothing's going to really happen. But again, when everyone's asleep and no one's looking, that's sometimes when the largest moves can come. So don't fall asleep completely. There is possibility for some major profit taking into the close tomorrow. So we'll watch for that. But as of right now, I don't see anything. We're just kind of at resistance in this bearish rising wedge pattern. We had a breakdown right here, but it was a false breakdown. It recovered, and now we're just still within this pattern. So I would be looking for another confirmation break of this pattern to the downside. Until then, we're just going to probably grind around within this bearish rising wedge pattern. Let's look at the SPY here. So same thing on the SPY. Hourly chart here. Here's your upward price channel there. There's your breakdown. That was a sell signal, but they recovered it. So it was kind of a false breakdown, which makes sense. Again, like I said, during the holiday, the holiday times, false breakdowns, false breakouts, they happen all the time. So I usually don't like to take breakdowns or breakouts that occur during this time. I kind of wait for confirmation when the market gets back to more regular trading and more regular trading volumes. And we're still chopping within this support line, this channel right here. But the bigger picture, we're just trading off that major resistance level right up there. So it's only about 3% higher, and we're trading just off that level. If I go back, and I show it all the time, but for anybody that's new, go back. Here's your 2009 bull market on the weekly chart. Held support there, held support, held support, held support all through there. Broke trend, and this is when I became bearish, basically. And tagged resistance, failed. Fed stepped in, pumped it back up, hit resistance again, failed. Fed stepped in, pumped it back up. That's basically what's happened the last few years. I mean, literally, there's been no increase in earnings or anything. It's literally just been the market wanting to sell off and then the Fed propping it back up. But again, this is where we're at. The Fed's not going to step in right here and pump things back up. The Fed steps in when we're down here. The Fed steps in down here. The Fed's not going to step in here. The market's going to, it's likely the market is going to trade to the market forces, and I think that's to the downside. Again, we've only got 3% before we hit that major resistance. Maybe we never hit it. When everybody's looking at it, maybe we don't hit it, or possible that we pop above it and recover it. If we come back up and recover it and hold up there and hold support and it looks convincing, that might be, we might be continuing the bull market, and all this downside that the market wanted to do was avoided. That's completely possible, but it hasn't happened yet. And as of right now, we're below resistance, and so I would want to be personally, I'm bearish in this area, of course. Okay, hourly chart here. This is the Qs, and I'm going to adjust this trend line to go right about here so it matches up with the futures. And we'll say this is our uptrend line. I can see that we're making a bearish rising wedge right there. You got 3 data points, 1, 2, 3. So there's your trend. And we got a bearish rising wedge, and we're basically at the apex of the wedge. What happens, this is a bearish pattern, so it tells me we're likely to break to the downside, but you got to wait for that break for the sell signal. So until then, we're just grinding around within that wedge. I'll point out these levels right now in case we get the breakdown. Maybe it happens tomorrow, or we start some sort of selling right into the year. We'll just point out the levels that I see as potential levels of support. So I've got this level here at a 298, and these are rough levels. They're not to the penny. 298. I've got about 288.50, and I've got 280.50. And then we have this trend line down here, this rising trend line, which has acted as support several times. It's a pretty well-defined trend line right there. So, and that would fall maybe around 275 to 278, or whenever we actually hit that. That trend line comes from the bull market. We're at the top end. If you look at the price channel that Qs has been in, this is 2009 lows. There's your bull market in triple Qs, and we've been way up here on the upper end. This is a low probability area to be in. When usually when you get to the the outside or the top end of a bullish pattern or a price channel, it's usually kind of the ending move, and maybe that's what this move here is, and then we're going to roll over. But again, going back to the hourly, I would wait for a break of what looks like to be a bullish rising wedge on this hourly. Divergences are pretty much still intact across the board. You can see here on the daily chart, negative divergence on triple Qs. SPY has the negative divergence. I can flip back to that real quick. Negative divergence on the SPY right there. And so we have negative momentum indicators. We have, bearish crossovers. You can see here we had the bearish crossover in the PPO on the SPY and on the triple Qs. This one's kind of whippy, but as of right now, it's a bearish crossover. And we have, bearish momentum indicators. We just need to see that bearish price action to start. Looking at gold here. Gold, if I go to the daily, let me show you here on gold. So gold has this downward price channel. This is the price channel it's been in. We had a false breakout there, and then we fell down to support. We're back above, and we've broken out, but it's not impulsive. And the problem that I have with this breakout is it's not impulsive, and it's taking place during the holiday trading. So all this price action here is taking place. I'd like to see what the market wants to do with gold, the first of the year, or the first week of trading in February. See if the buyers come in or if they take gold down. You can see the dollar here on this daily chart is making a bullish falling wedge pattern Pretty big pattern there. And if I zoom in, well, look at the daily. You've got bullish divergence right there on the dollar. That's still intact. If I look at the PPO, you can see bullish crossover right there. So bullish momentum, that's what that's telling you. And we just don't have the bullish price action. If you look at the daily here, we made a slightly new marginal low today as well in the dollar. And yet they're, now it looks like they're kind of buying that up. If I go to the 2-hour chart, you can see, they're buying it up a little bit. The point is that, it's a bullish setup. All right, the price action's not there, but it's a bullish setup. Doesn't mean it's going to play out, but as of right now, it's there. But there's no trigger. We don't have a break of this bullish falling wedge. You'd want to see some sort of a breakout, and we just don't have that. So until you get that, I would look at other opportunities, and wait for these trades to potentially trigger. Let's look at Apple here. So Apple had this resistance line that I marked out. There it is, and you can see it was clearly rejected right there. So until you break above that, that's resistance. And so we'll see how this plays out. Bullish divergence as well. You can see it right there. Or sorry, bearish divergence. If I could get my line to play nice with me, you can see here. There's your bearish divergence right there. Where we made a slightly new high. We just popped above that high right there just briefly, and it was on lower momentum. So bearish divergence, no PPO bearish crossover yet. You can see the momentum on this is still pointed up, so we don't have that to confirm. So again, you need to wait and see. And then there's also this daily trend line here that I'm watching that, I think if you get a bearish breakdown of that or a sell signal, then that will likely start the motion to the downside. As of right now, momentum is up, price is up, but we have divergence. So no trade. I don't see any trade on this yet. Okay, this is one of those ones that has a breakout. Corn had a breakout. I noticed it when it was happening. So here's the daily chart. This is going back to 2014. So big, nasty bear market in corn. And you can see here that basically down here at these levels, you had bullish divergence. There's your bullish divergence right there. And from there, it's rallied. And your trend line goes back to here. It's not the best trend line, but we got 3 data points. There's the second, and there's the third, and there's your breakout. So that is a breakout. It's just not convincing to me, and the reason why is when I look at the daily volume, I'm not seeing, yes, there is definitely more volume in this area. You look back to the past 10 years, or going back a while, you can see pretty low volume, and you can see in here pretty good volume. Lots of buying has been taking place in this area down here. So there's definitely buying of this thing, and we do have a breakout. The only thing is that I don't see the volume on the breakout. When I see, when you see this breakout right here, there's not an increase or a spike in volume on the breakout. That's one thing I don't like. And the reason why it's probably not there is that we're looking at holiday trading. We're breaking out during the holiday trading. I don't like that. So I want to wait till the market picks back up. The institutional investors come back, and I'm going to watch this and see what they do. I suspect what they'll do is smash it down a little bit so that they can buy this down here, and then maybe we'll start to see that volume come in. So I'm going to watch that. BBY, I pointed this one out a while ago, but you can see there's your uptrend line. We broke, nice impulsive break right here, came in the form of a gap down, and it was followed by nothing but selling. So that was a good clean sell signal right there. We've since fallen basically to, let's see how this chart keeps. Yeah, right here. We've fallen right below this resistance line. So right now I think the trading range is you've got resistance at 104, and you've got support right there at about 91. We haven't fallen to that support. This looks like we're bear flagging out, basically. So we got the bear flag here. There's your flagpole. You draw a flag, something like this. There's your flag. And then you would look for this to break, to the downside. This is projecting. This is because I'm on log scale, my lines kind of stretch out, but I would say this is cleanly projecting this gap fill right here at 91. So but you got to wait for the breakdown of the flag for your next sell signal, and a break of that flag to the downside would mean we're likely heading down to 91. That's a move of about 10% more to go, and then I think we're likely to see some support down there. Nike here. So Nike is setting up into a bearish rising wedge on the daily chart. You can see here, this is going back to the March lows. We're coming up. Here's your bearish rising wedge. In recent price action, this was your earnings. They came out with earnings. It popped. But look what, the market's been selling Nike post earnings. So as good as their earnings was, there's profit taking here. Again, end of the year price action. So I still want to see what happens the beginning of the next year. But what I would be looking for on this is a break of this trend line right here that goes back, that kind of creates this bearish rising wedge. We've held this a couple times, so I'd look for a break and a sell signal. Looking at the daily, you've got negative divergence right here. The PPO, yeah, it's kind of choppy and whippy right now, but there is a bearish crossover on it. So you've got negative divergence, bearish crossover, bearish pattern, but no sell signal, no trigger. So got to wait for that breakdown or sell signal on this thing. And then I've got some levels marked out. The first level is, I see a level right here at 136, so it's likely we're going to come down, hit that, and make maybe another move higher before it rolls over. But once you get that sell signal, 131.10 I would say is a good level of support, first level of support basically, 126.50. And then ultimately this gap fill down here at 117.50. So those are some levels that we'll mark out for a potential trade if this breaks. Peloton here, I like this as a short. Fundamentally, this thing's out of control, but technically I like it as a short as well. Fundamentally, I think this company's valued more than the entire fitness industry combined or something like that. Okay, we all know the fundamentals make no sense, but that doesn't mean it can't continue to go higher. The technicals, though, are telling me that the run's over in this thing, too. So here's what I see. Daily chart, this is going back to the March lows. This is when this thing really started to take off. And, since March, basically, this thing is up about, what is that? Well, about 850%. So, okay. And here's your trend line right there on the daily chart. We broke trend back here in November, but there was no negative divergence on the chart. So because it didn't have negative divergence, the momentum was still potentially higher. And so it did move up, and it came out with some buyout news here. This is the news that they said, oh, we're going to buy some other company. They popped it, but that's all been sold into, and we're actually less than before. Now, we're pretty light in the last couple of days because it's end of the year. But look for the selling to continue when we start up the new year. That's really what I think is going to happen. We do have negative divergence now in the daily chart. See how we made a lower high right here on a higher price. So momentum is diverging from price. Price had moved higher, and momentum is making lower lows. The PPO, as I zoom in, has not made that crossover yet, but it's looks like it's heading that way. You can see we're pointed straight down. This one's coming up. Looks like we're going to meet here and make that crossover. So any more selling, and we should see that PPO crossover. So I like it. I like this thing short at resistance, which is basically this trend line. Adding to a short near, up at this resistance line. I like that. So again, that's what I'm looking for. Looking for this thing to continue lower, and I'm looking for it to probably head down to about this $80 area, and that's going to be a potential profit. Let's just say from where we're at, about 50%. So 50% to the downside is the same as as getting like if I do my math wrong, it's not 50% up, 50% down, and you're equal. Let's just put it that way. I think if we look at the actual drop here, this would be a $72 drop, which is about 50%, And see if I can kind of, I think this is right. And then, yeah, and then to the upside, a $72 rise was about a 350% rise. I think that math's right, but don't quote me if I'm wrong. I'm just trying to say that percentage-wise, it doesn't have to drop as much percentage-wise to equal a much larger loss. You have to gain more percentage-wise on the upside when you lose. Nvidia, I'm short this one. Again, I know this is a strong company. I mean, they seem to be doing good things, but it's a technical short, basically. It's a valuation short. The technicals say big negative divergence right there. You can see that, the negative divergence really showed up right here. This is where it was. It was basically right there. And we've just extended that downward momentum. Now, yeah, they could just pop this thing higher and take out the divergence. That's completely possible. But as of right now, it's there. I think we're going lower. I think we're at least going to head down to this 475.50. It's not a huge drop from here. That's about a 7-8%. Likely we'll find some support there, bounce a little bit. And I've got other levels down here at 430 and 396, 395.50 basically. And this one's actually about 433. First level profit level though would be about 476. Let's take a look at this one, Digital Turbine. You can see here on the daily, clean and clear negative divergence right there on the RSI. So we started to diverge right there. This was a divergent high. And you can see when you get these divergent highs, see the divergent high right there, sell off. This was another divergent high right here, sell off. And this was a slight divergent high, not a little bit of a sell off. And then another divergent high right here, and we're selling so far. But we've got this trend line right here going back to the March lows basically. And been walking up the trend line. An impulsive breakdown or sell signal from there would be the short entry. Until we get that breakdown, I'm not interested in shorting this thing. But if you get that sell signal, that would be it. Now, if you look at the PPO, you can see we're just starting to get that bearish crossover right there on the daily chart. So if we close, slightly lower, then we will have that bearish crossover confirmed. So we're getting confirmation on this negative divergence. We just don't have a sell signal. I'm waiting for that one. Oh, let's take a look at Intel. Yesterday's price action was kind of funny. So there was some news that some hedge fund floated out, clearly in an attempt to pop the stock. That's why they floated out on this really low volume time period. They could have waited till next week. They do it this week, trying to get low volume trading to pop the stock. So they were probably in there buying. They probably had a bunch of buy orders ready, and they float the news, and then they hit the stock with low volume. But what did it do? Well, they weren't successful at breaking back above support, and I think that's what they're trying to do. You can see here on the daily chart on Intel, this is going back to the bull. This is basically the bull market in Intel, going back to 2009. On this weekly chart, we've been walking up there this entire trend line, lots of tags of support, and then we broke support right here back in October of 2020. Recovered it, looked pretty bullish when you recovered, but then it failed. And look, they're trying to recover it again. So yesterday's news headline driven pop really just came right up to resistance, and it was rejected there. The way I traded that is I was looking at my my holdings, and I noticed Intel randomly was all of a sudden had popped a bunch, and I didn't know what was. I looked at the chart, I see that it was just a spike higher. And then I looked at my chart, and I saw pretty much exactly where it spiked to and was rejected at on that 1 minute chart. You can see that on the 1 minute it spiked way up here and then got rejected. And so I added to my short position on Intel right there at resistance. And then as it came back down, I covered that short that I had added into it. What I'm doing is lowering my cost basis. So I have a position in Intel. And as I get spikes into resistance, I can add and kind of trade around that, so I can lower my cost basis so that it allows me to hold a core position short on this thing for longer, so that if it starts to work in the direction that I think, and potentially starting a bear market in Intel, then I can just swing trade this and hold it and write it down without really going underwater because of some of the trades that I've done. So we'll watch this one. I suspect they're not done trying. I think today or tomorrow it's likely that they're going to try to pop this up again and get it back above the support, and they might succeed at that. And then maybe we close right around here, and then we'll see how what happens first week of the next trading year, what they want to do with this. One of the things that I don't like about Intel is it does have bullish divergence here on the daily. So I don't have a full-size position in this yet because of that divergence, and I haven't seen the price action completely confirmed to the downside. I want to see more selling. And I'll add to that if it starts to work. But as of right now, yeah, we don't have that. We've got bullish divergence here where this was a divergent low, and that's all we've had in terms of divergent lows. But we're watching this one. Qualcomm, I'm not in this one anymore. I took the short right here on this gap up on earnings. I got short, went underwater a little bit as it continued to ramp, and I added to my short on each one of these. So as I added, I was underwater, but I was adding to the trade, which oftentimes is not something that you should be doing. But I felt confident about the trade. It had negative divergence, and then it sold off, had a pretty impulsive move down. I started covering my trade right there because I had added to my short here, and my original position was here. I was profitable on the trade, but the thing is it sold off and came right down to this support line right here. And it had, it didn't break that trend line. So I covered and I'm waiting now for the next sell signal on this, which would be a break of this trend line. So if it breaks, I'll take a short on this thing again. But until then, we'll just let it continue to work its way up in this price channel. Here's FedEx. This one's worked out, very nicely. You can see here we had this bearish rising wedge right here. I really like this one. We had negative divergence back then. And we had a bearish pattern, a bearish rising wedge. We then got the breakdown and sell signal. The sell signal really came here, but it wasn't an impulsive breakdown. This was a better sell signal. And you would have gone under a little bit as they popped it up. But again, from the breakdown, it's just really gone straight down. From there down to there, it's gone down about 12.5%, almost 13%. And we've hit this next level of support, 258.50. I think we're at a level of support now. So we're likely to get some sort of a reaction before potentially continuing to break down. If we break this level here, there's really not a whole lot of support till we get down to about 183.50. So that's a ways down. So I'm going to watch that and see, what kind of continuation we get. Okay, Citigroup, I'm still short this thing. It's gone nowhere basically since I started shorting it. It's just flat. So I'll just continue to hold it till we get some sort of price resolution, or I get stopped out or the trade starts to work. Negative divergence right here on the daily. You can see on the PPO as I zoom in, bearish crossover right there. And the momentum's pointed down. So everything's telling me that we're going down when I look at the momentum indicators. We just haven't seen that breakdown in price, and it's likely to happen in one swoop. You're gonna get a gap down, or it's gonna have one big sell-off day, and it's gonna wipe out all these little tiny grindy days right here, and probably move straight to support 53.50. It's about 53.60 or so. I think that's your first level of support. You break that, and I don't see support till we get down to about 43.60 or so. And so that is what I'm looking for. Also, looking at the weekly chart of Citibank, you can see back here in 2011, this was really the bull market that started in the banks. It didn't really happen in 2009. This was kind of an undershoot. And then you started to create a trend starting back in 2011. So you got the lows here, you got reactions here, a couple reactions there, reaction there, and then you broke, and then we're testing it from resistance from below. So that's what's going on right now. We're basically we're right at major resistance, kind of slightly above it. But again, this is not a breakout. We're not breaking out above it. We're just kind of hanging in there, running stops is what it looks like. And then we're going to roll back over. And we'll wrap up here with bonds. Long-term bonds here, TLT, oftentimes a safe haven play, are, they're continuing to show bullish divergence. So there's your daily bullish divergence. And the bonds aren't really going anywhere. They're just kind of selling off. Buyers are stepping in. They're selling off, just flat. So everything looks like it's kind of coiled up for some sort of a big move in the markets. And the charts tell me it's going to be a move to the downside because of, the bonds have bullish divergence. The dollar has bullish divergence. And stocks have bearish divergence. And so it looks to me like bonds are going to go higher. Dollar's going to go higher. Stocks are going to go lower. That's what the charts are set up for. It doesn't mean it's going to actually play out, but that's what they're set up for as of right now. So that's what I'm looking for. I'm waiting for it to show up, looking for some sort of a sell signals, and confirming charts to, continue to add to positions or take new positions, things like that. Likely to happen into the new year. But again, don't fall asleep. So it could, so we could get some major selling the rest of today and tomorrow. So watch for that. That's all I got, guys. Leave me a thumbs up if you're new and you want to learn how to use technical analysis to evaluate charts and potentially find trade ideas for yourself. Take my technical analysis and trading course. Link is in the description below. And I will catch you guys on the next one. If nothing new happens to round out the year, then I'm not going to put out a video, and I'll catch you guys starting back up in 2021. So thank you. Catch you guys later.